Hey everyone, it's Nick from Dividend here, and in today's video we're going to be discussing the long-term investing guide to compounding wealth. So more specifically, here's what we're going to be talking about today. First, I'll talk about why be a long-term investor. What are the benefits to long-term investing? And then before going into how to invest for the long term, I'm going to present a few interesting investing quotes about long-term investing from the world's best investors. After that, I'm going to show you a simple 4-step long-term investing strategy that can help you think for the long term and make better investing decisions. Next, I'll introduce 2 slow-changing industries for long-term investors before closing up with 6 critical tips for long-term investing. So first, why be a long-term investor? There are 3 primary reasons to be a long-term investor in our opinion. First, it is highly effective and is very likely to result in meaningful wealth creation over the long run. Next, it requires way less of your time, freeing you of constantly watching the markets for small fluctuations in stock prices. The third reason to be a long-term investor is that it results in lower fees and allows you to defer capital gain taxes indefinitely and allow that money to stay in your account compounding on your behalf. I'm going to discuss each of these 3 points in more detail next. So first, the effectiveness of long-term investing. Long-term investing just simply works. And the reason why it works is because it places your focus on the things that really matter when it comes to investing. So instead of thinking about day-to-day fluctuations in stock prices or quarterly earnings reports, you'll focus on a business's competitive advantage, their growth prospects, and the competency of their management team. All of these factors are really the things that drive long-term shareholder returns, not short-term things like day-to-day fluctuations in stock prices. Now, surprisingly, with most things in life, if you put more time into it, you'll get better results. Investing is not the same. Long-term investing is actually better, and it simultaneously requires less of your time, which creates kind of this interesting win-win for investors. And you have to keep in mind, time is money. The purpose of life is to not manage your investments. Instead, you should be focusing your free time on more important things like reading books or spending time with your family or whatever is more important to you. If investing is really your passion, then it's a different story. But I think for a lot of people, that's not the case. So interestingly enough, long-term investing requires less of your time. And all you have to do is just check up with your investments, which I think at most on a quarterly basis is sufficient. The third benefit of being a long-term investor is that it reduces the taxes and fees that you pay. So if you think about the 2 main costs associated with investing, those are brokerage fees and capital gains taxes. And both are only triggered when you trade. So if you're buying businesses with the intent of holding them for 10 or 15 years, you're naturally going to trade a lot less, which incurs less fees and allows your money to stay in your account, compounding to build your wealth. So that's the third benefit of being a long-term investor. Now, I'm not the only person who thinks long-term investing is the way to go. Here are 5 quotes from some of the best investors in the world on what they have to think about long-term investing. So the first is from Seth Klarman. So he's the billionaire founder of the hedge fund, the Baupost Group, which manages, I think, about $9 billion of investor money, since Seth himself is a billionaire. So here's what he says. The single greatest edge an investor can have is a long-term orientation. Now, if one of the best investors in the world says that the single greatest edge you can have is to invest for the long term, I think it's probably pretty wise to listen. The next quote is from Philip Fisher, who ran Fisher & Co. and wrote the wildly popular investing book, Common Stocks and Uncommon Profits. And he says, if the job has been correctly done when a common stock is purchased, the time to sell it is almost never. The next 3 quotes are from Warren Buffett, who, for many investors, needs no introduction. His first quote says this, only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. He also says, when we own portions of outstanding businesses with outstanding managements, our favorite holding period is forever. His third and last quote on this page is, benign neglect, bordering on sloth, remains the hallmark of our investment process. Now that you've seen what these legendary investors have to say about long-term investing, let's move on to our simple 4-step framework for investing for the long term. So the strategy is this. First, identify companies with strong competitive advantages. Second, be sure that these companies' competitive advantages will last. Third, invest in those companies when they are trading at fair or better prices. And lastly, hold the companies for the long run. This 4-step process greatly reduces our propensity to buy and sell stocks, which is a good thing. It also reduces our investment universe because not all companies have a strong competitive advantage. So that begs the question, how do we find companies that meet this criteria and allow us to follow this 4-step framework? We believe there's one key indicator of a strong competitive advantage, and that is a long history of steadily increasing dividend payments. So if you think about it, stock prices go up and down, earnings go up and down, but if the company can increase its dividend each and every year for many, many years, it's usually because it has a strong competitive advantage. Now, with that in mind, I'm going to present to you 3 universes of stocks that are kind of ripe for long-term investing. And these universes are the dividend aristocrats, the dividend achievers, and the dividend kings. The dividend aristocrats are stocks with 25 plus years of consecutive dividend increases, and the dividend achievers are a similar group of stocks with 10 plus years of consecutive dividend increases. The dividend kings are, I guess, the best of the best when it comes to dividend growth. Now, these are companies with 50 plus years of consecutive dividend increases. We maintain databases of each of these stocks, of each of these groups of stocks, I should say, along with important investing metrics like dividend yields, price to earnings ratios, and those sorts of things on our website. I'm going to toss links to those databases in the description of this video so you can access them easily. The next thing we're going to discuss is 2 slow-changing industries for long-term investors. Now, a few industries, just like on the last slide, I said there's a few universes of stocks that are ripe for long-term investing. A few industries are also ripe for long-term investing, and those 2 industries are consumer staples and healthcare. Consumer staples, especially food and beverages companies, have this ability to just maintain their competitive advantage almost indefinitely. People will always need to eat or drink, and the strength of the branded consumer staples space means that consumers will often go back to these familiar brands that they're used to, which allows those companies to profit and grow over the long run. The second industry that's ripe for long-term investing is healthcare. Now, healthcare businesses are strong right now, and they're going to continue to grow as the global population grows and ages, and also as people just become wealthier and have more disposable income to spend, unfortunately, on healthcare. So we believe that consumer staples and healthcare are the 2 industries that are most ripe for long-term investing. To close up this video, I'm going to give you 6 critical tips for long-term investors. So the first is that long-term investing is simple but not easy. I think most people watching this video will agree that the concepts behind long-term investing are relatively straightforward. It's their implementation that's difficult. So it requires a certain temperament and a certain strength of mind to follow a long-term investing strategy. So keeping that in mind as you go through this process will help you. Our second piece of advice is that stock prices lie while dividends tell the truth. Every once in a while, a great company will experience some sort of temporary trouble that drives its stock price down. That does not mean that the end is near for this company. It's important to pay attention to the fundamentals, and if the company's fundamentals are strong and is continuing to grow its dividend, then this temporary stock price decline may actually be a buying opportunity. The third piece of advice we have is that long-term investing is not the same as buy and pray investing. So buy and pray investing is when you buy a stock and then literally never sell it and never pay attention to it again and just pray that it will go up in price. Long-term investing is different. So even if you are a long-term investor, there are still reasons to sell a stock. Reasons would include if there's a fundamental deterioration in the business, if the company cuts its dividend, or if the stock becomes irrationally overpriced and you can sell it to reinvest those proceeds in better opportunities. So long-term investing means that you will periodically monitor your investments instead of just buying them and holding them over the long run, hoping that they'll go up without paying any attention to them. Our fourth piece of advice for long-term investing is to know what you own and why you own it. The reason why this is important is because, like I said earlier, sometimes great businesses do experience some sort of temporary trouble. If you have a deep understanding of the business, this will help you endure these short-term fluctuations. Our fifth piece of advice is to not sell a business because of small gains. Great businesses with strong competitive advantages will allow you to compound wealth, not over 1 or 2 or 3 years, but over decades. Keep that in mind before selling a stock that's risen in price a little bit. The sixth piece of advice for long-term investors is that overreaction is harmful to your wealth. Just like in the past when I said, don't sell a business because of a small gain, it's important to not sell or overreact because a stock has had a minor decline in stock price. That's all we have to talk about long-term investing today. What I'd like you to do now is first email me a video recommendation at nick@suredividend.com. The second is to like this video and leave a comment telling us what you thought of it. And the third is to subscribe to our channel, Sure Dividend, if you want to learn more about investing in high-quality dividend growth stocks for the long run. Thanks for watching, and we'll see you next time.